Today, the Federal Reserve meeting just ended. Jerome Powell steps to the microphone, millions of Americans glued to screens nationwide. CNBC live, Bloomberg terminal alerts blaring, retirement accounts on the line. But here's the shocking truth Wall Street doesn't want you to know. The market didn't wait for Powell. It never does. Wall Street already made its decision. While you watch the FOMC statement, hedge funds on Park Avenue adjusted $20 trillion in positions. Big banks hedged their exposure. Institutions mapped every scenario. Tech stocks climbing higher. Gold smashing $5,600, the highest price ever recorded. Tesla, first annual revenue drop in company history. Microsoft crashing 6% on AI spending shock. Meta surging 10% on earnings beat. This isn't random volatility. This is the starting gun for the biggest positioning unwind since 2008. A 90-day warning before everything reverses. Confidence breaks, leverage explodes, and retail investors like you and me get caught holding the bag. Hit that subscribe button right now. Turn on notifications because the collapse timeline just went live. Let's break down what really happened today and why your portfolio has exactly 90 days before liquidation. Let's cut through the headlines. FOMC statement drops. No rate cut until at least July 2026. Powell calls the economy strong but uncertain. Inflation cooling to 2.4%. Labor market resilient. Standard script. But markets? S&P 500 up 0.8%. NASDAQ, led by tech, jumps 1.2%. Dow barely moves. Gold skyrockets to $5,600 per ounce, a record that'll make your jaw drop. Why the disconnect? Because by the time Powell spoke at 2:30 p.m. Eastern, Wall Street had already voted. Institutions didn't need his words, they had the data. Hedge funds spent weeks positioning. Goldman Sachs, BlackRock, Citadel, they reduced risk into strength. Banks hedged derivatives exposure. Pension funds rotated out of small caps into mega cap tech. Now the earnings bombshell. Microsoft, the AI darling, misses big. Shares plunge 6% after hours. Azure growth slows. AI capital spending spooks investors. $3 trillion market cap takes a hit. Tesla, catastrophic. First annual revenue decline ever. Canceled 2 EV models amid Banan collapse. Stock tanks despite beating quarterly estimates. Elon Musk pivots to robo-taxis. Too late. Meta beats expectations, plus 10% surge. Mark Zuckerberg's AI gamble pays off short term. But here's the danger signal. This tech split, winners and losers emerging fast. The Magnificent Seven, that $7 trillion market cap club, just showed its first fracture. When Microsoft bleeds and Tesla stumbles, the whole narrative cracks. Treasury Secretary Scott Bessent drops another bomb. 600,000 families already applied for Trump tax accounts in early tax season. Carvana stock crashes 14% on short seller allegations. Deutsche Bank under money laundering probe but beats profits. Trump backs off European tariffs over Greenland talks. Gold loves the uncertainty. Every signal screams, positioning maxed out, leverage everywhere. The rally runs on fumes.
America, wake up. The story you hear is wrong. CNBC says Fed moves markets. Jim Cramer screams about Powell's every pause. Robinhood traders chase headlines. Wrong, wrong, wrong. Markets don't react to speeches. They create the reality before the speech. Think about it. When Powell walks to that podium, what's already happened? Hedge funds spent January reducing tech exposure 15%. Banks added $2 trillion in interest rate swaps. Pension funds rotated $500 billion into gold and tips. The speech isn't the decision, it's the reveal of positioning already in place. Every January rally sells the same lie. New year, fresh start, optimism resets, AI boom, tech earnings, Fed won't break the party. 2026 feels different, even stable, but stability built on crowded trades? That's how 2000.com ended, how 2008 housing blew up, how 2022 tech lost 70%. Why does big tech always outperform before Fed meetings? Simple. In uncertainty, capital flees to perceived safety. Mega-cap balance sheets bigger than most countries, global revenue streams, dominant AI narratives. When conviction fades across America, liquidity hides in Apple, Microsoft, Nvidia, Meta. But here's the trap. Retail America trades the headline. You wait for 2:30 p.m., watch the reaction, chase the S&P spike, buy the dip on CNBC alerts. Institutions do the opposite. They position early, reduce risk into optimism peaks, let retail provide the liquidity when unwind hits. Today proves it. S&P rallied 3% this month before Fed. Tech led every day. Institutions de-risked while you bought January dip. Powell confirmed their positioning. Volatility stays contained for now. But crowded optimism doesn't fade quietly. It explodes.
Let's name the players. Institutions control 85% of market volume. $20 trillion in leverage across derivatives, ETFs, options. BlackRock alone manages $11 trillion. Vanguard, another $9 trillion. Hedge funds, $4.5 trillion AUM. They own the casino. Retail, 15% volume max. Robinhood, Webull, your 401k. You trade headlines, they trade positioning. Today, while Powell spoke, institutions watched three things: leverage concentration, tech options gamma highest since 2021. One wrong move unwinds everything. Crowded trades, 92% of hedge funds long megacaps, most crowded positioning ever recorded. Liquidity traps, January rally ran on light volume, no real buyers left. Fed meetings don't create opportunity. They expose who positioned correctly. Today, institutions win again. Powell validated their early moves. Retail chases the rally top. But confidence breaks fast. Markets don't crash on bad news. They crash when Wall Street stops believing the narrative. If next week's jobs data surprises or inflation ticks up, positioning reverses overnight. $20 trillion turns into $10 trillion in weeks. Gold at 5,600 isn't random. Trump-Greenland resource talks signaled dollar weakness. BRICS watches every move. 128% debt to GDP ratio. $100 billion monthly interest payments. The system strains under weight nobody discusses. Here's your 90-day roadmap. Days 1 to 30, rally continues, retail piles in, institutions quietly exit, volume fades. Days 30 to 60, first crack appears, tech earnings disappoint, Microsoft Tesla weakness spreads to Apple, Amazon. Gold keeps climbing towards $6,000, dollar weakens versus BRICS currencies. Days 60 to 90, unwind accelerates, S&P tests 6,000 support, Nasdaq loses 20%, retail panic sells into bidless markets, institutions short the bottom. Why 90 days? Same as 2022. Tech peaked January, bottomed May, exact pattern, leverage identical, sentiment matches. History doesn't repeat, it rhymes. Remember Archegos 2021? $20 billion blow-up in days. Today, $20 trillion at risk. One hedge fund spark lights the whole powder keg. Tomorrow, watch volume. If tech rally fades on light volume, unwind started. Powell bought time today, but crowded trades expire fast. Next triggers: Thursday jobs data, Friday consumer confidence, next week Apple earnings. Institutions exit first, always. Retail trapped at tops. Protect yourself now. The market didn't wait for Powell. It positioned for collapse. Fed confirmed the setup. You have 90 days. Hit subscribe. Notifications on. Protect your money before $20 trillion unwind hits America. Collapse Timeline, live every week. See you at the bottom.